Melissa, Alphabet walking into a brutal tape after shares of AMD got whacked after the bell. That company disappointed when it reported just a couple of hours ago, and investors sold off in a big way. And AMD isn't alone in the chip space either. Check out the SMH, the ETF that tracks the chips, now on pace for its worst month, Melissa, since November 2008. The view, though, better over at Microsoft, with that company beating Wall Street's forecast. Its commercial cloud business surging nearly 50%. Tomorrow, the parade of earnings continues with a lot of big names reporting, including Twitter, chip giant Intel, and one of Microsoft's big rivals in the cloud, Alphabet, where analysts say business does look strong. Still, that stock got hit hard today, down about 5%. It's now down about 12% so far this month. Melissa, back to you.
All right, Josh, thanks. Josh Lipton in San Francisco. Now to Deirdre Bosa getting us ahead of Amazon's report tomorrow. Deirdre.
Well, Melissa, if you think Alphabet had a hard month, Amazon shares are down nearly 17% in October. But as Melissa mentioned, still holding on to gains of about 40% year to date. Now, the company makes up about a third of the value of the entire S&P. So a big beat or miss on earnings could have an outsized impact on the broader markets. Amazon, of course, is known for e-commerce, but investors are going to be interested in some of its other businesses that are growing much faster. One, cloud computing. AWS is the company's profit engine. Two, advertising revenue. This is now a multi-billion-dollar business for Amazon. And third, subscription revenue. This is a line item that includes Prime membership fees and other services like Amazon Music. There are also headwinds, though, and that's why some analysts are cautious going into earnings tomorrow. At the start of this month, remember, Amazon raised the minimum wage for all of its U.S. workers. The company also faces the prospect of higher shipping expenses if a U.S. Postal Services proposal goes forward. So, Melissa, costs could also be rising as it heads into its already expensive holiday season.
All right, Deirdre, thanks. Deirdre Bosa in Vancouver for us. Let's get more now on today's Tech Wreck. Gene Munster is a founding partner and managing partner at Loup Ventures. Gene joins us here at the NASDAQ. Good to see you.
Hi, Melissa.
So in this kind of environment, are you comfortable saying to investors, even for stocks that you like, to step in and buy?
Depends on the company. So we think of FANG kind of going in two different directions over the next year. On one side, you got these high multiple stocks like Amazon, great long-term trajectory, but there's still room to go down on that. Facebook, there's some changes in the privacy that could impact user growth, and also just where does Facebook fit into this. But then on the flip side, you have companies like Apple, strong balance sheet, giving back more cash at probably a pace of twice as fast as investors expect over the next 3 years, and more stability than you've ever seen in the Apple story. So companies like Apple, and I think Google will benefit from that too. So I think you're going to start to see a division in terms of which tech stocks to stick with.
Where does Alphabet fall? Because for a long time, a lot of people were saying that it was a more defensive stock. The valuation isn't so high. The growth in revenue is there. And here we are. It's basically flat for the year.
I think Google's a great one for investing. It's hard to predict what it's going to do in terms of trading given the market, but a great one to own. For the simple reason is that they have a pole position for some massive disruption that's going to go on. The reason why we've had tech leadership for the past 5 years is industries have been disrupted. And the future ones are going to be healthcare, which Google has a pole position in, and also transportation. So we're optimistic about Google and their position within these transformative markets. And so yes, there's some headwinds in terms of what's going on with privacy and users and Google giving more transparency around this. But I still think this is a great story, the oxygen of the internet. Great story to own.
In this market environment in which tech is just getting crushed, who has the shortest leash?
I think it's Facebook, followed by Amazon, given the valuation. Facebook, because I think the fundamentals, the trajectory of the company isn't transformative. And I think Amazon, just because there's no valuation support.
And in terms of the Tesla call, we got Tesla results. Yesterday, they were up to 12.5%. Today, in the after-hour session, they're up about 11% still on the back of their results. The conference call just finished up. So what are the highlights, and what do you see for this company tomorrow?
They're very bullish. If you take them for face value, the stock is going higher. The bottom line is they've got a lot of demand and are making some meaningful improvements in terms of profitability. They've reiterated they're not going to raise money, and I think if they can service this debt over the next year, which they're trying to convince investors that they will be able to do that, the shares will move higher.
Do you lump Tesla in along with Amazon on the valuation front? Because if so, should we be concerned that Tesla is one that gets sold in a market environment that sells high-value tech?
it is a concern, but at the end of the day, I think it's such a transformation. I liken back to the year 1900. New York had 1900. We're going to go way back, Melissa, here. 1900. New York basically was entirely driven by horse and carriage. In 1907, it almost was entirely driven by automotive. When I think about that kind of transformation and the potential that Tesla has, not only around autonomy, today on the conference call, they were talking about competing with Uber and Lyft with a ride-sharing model. When I think about what they can do around electric and autonomy, I look the other way when it comes to valuation.
You know, the mechanics, Mike, in terms of tech and the earnings out tomorrow, a lot of the NASDAQ 100 is going to be riding on the after-hours action.
It had a look of a bit of a give-up trade for a lot of the big tech stocks, right? They kind of fell away one by one, and then today it was just a little bit indiscriminate, which is the makings of getting overdone on the downside, and maybe you pick one by one on the way up again.
And you today were looking at picking up some Alphabet, right?
Yeah, well, yes. I mean,
more, I should say.
Right, more. It is my largest position. I just think, you know, I would love, the thing I would most love is some sort of capital allocation plan, similar to what Apple's doing. They generate an enormous amount of cash. That's been my one big sort of negative for them. But there's a ton of value there. Even aside, I mean, that cash hoard is among the biggest on the planet.
Yeah.
Yeah,
and they do nothing with it.
Google valuation is really attractive. I worry a little bit about GDPR. Look, if you liked Amazon in a high growth environment, I think you like it more actually in a lower growth environment. I think that's better insulated.